Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, December 14th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Thursday, everyone. Here's a look at the daily time frame of the ES. You'll notice the previous session here, we got our FOMC statement and rate decision with the press conference that followed. Prices were basically in a super narrow range up until that point, and as soon as the FOMC released the statement and rate decision, 1 o'clock p.m. Central Time, price rallied tremendously here. You can see the newly minted FOMC key level here, 46.99 quarter, basically 4,700. Big time push to the upside. This is kind of what happened last time. This is the November 1st FOMC. Price is sitting in a narrow range, exploding to the upside, and then we've rallied ever since. Here's a second one, boom. We're now coming into the previous year's highs, 48.08. 48.08 quarter is the previous year's high. A little bit more to go grab that final target of the year there. Then once we do, are we going to see further expansion, or do we come back into the newly minted FOMC and perhaps come back and fill the previously naked here, or currently naked, FOMC level along with VWAP down below? So how is this going to play out moving forward? Still super bullish, as we've noted before. There just hasn't been any signs of rejection or weakness, so you got to continue to flow with the market to the upside here. At some point, we may get overextended and find a sharp rejection that would lead us back into the range. Today, bulls still looking to defend morning weakness for a continuation higher until proven otherwise. Taking a look here at the NQ. NQ right now, 47% of ADR heading into the RTH Open, narrow range, big time 5-day move higher. The FOMC key level yesterday, right here, and that level is 16,591.75. That's right at the previous highs as well. So previous year's highs right here. Those previous year's highs are 16,564. We've pushed through them. We've now gotten new highs. This is new highs for obviously this new 3-4 year range here that's been in play right there. That's been in very important range right here. So if you look at this box right here, we're right through the top of that box here at the moment. We've flowed through the upside, back down to the upside. We're now above it. Is this a moment where we backfill into it, even back to 14K, or do we start to explode to the upside and create new market structure above? If we create new market structure above, you're basically looking at about 2,500 points on this distribution. That could be 2,500 points higher. So this could be looking at about 19K to the upside based off of this kind of measurement here. So this could be a pretty significant move, but we're at the edge. And if there's any sign of significant rejection up here and a failure to hold these highs, maybe not today, maybe next week, if we get some significant rejection, it could be a huge higher high failure that leads us back down within the range. So still watching this edge, but clearly bullish right now, and you don't really want to fade in front of this strength here until we see strong rejection. Failure to hold the 16.8 level intraday could open up a little bit of intraday weakness. Taking a look here at crude oil. This one's up big today, 2.5% higher. 2.5% higher. We mentioned in the previous session that we might be getting a lower low failure, a modest lower low failure here, which could open up a return back towards 70. Never quite reached 70, got very close yesterday, and then got it in overnight trading today and pushed through it. We mentioned if it can snap back towards 70, it would open up a continuation to retest 72 as we stay within this range. Once we get up there, we could be looking at a continuation back down within the range as this market tries to find its footing. Overall, big time downtrending market in the medium term. To end the year, there tends to be a little bit of a bullish bounce, seasonally speaking, but we need to find a good strong low. This is a good short-term low off the prior pivot low, which will open up 72, maybe a little higher, but we're still trending down and we still lack a really big rejection. So are we going to test 67? Do we go down and grab the 64 market structure edge? Still trending down until proven otherwise, and we could be headed towards 64 before we finally get a big time turnaround. So right now, short term up towards 72, perhaps a little higher, and then we got to see if the current trend takes hold at that point and leads us back down. All right, taking a look here at gold futures. This one's up even more than crude oil, up 2.6% here today. A massive push to the upside here in the previous session off the FOMC key level. 1996.70 is the level, so just shy of 2,000, and immediately bid. So gold immediately bid, just like the ES, the NQ, the YM, immediately bid to the upside. As a matter of fact, the only thing that was down was the dollar yesterday. And price going bid, big deep pullback. And again, right here, previous month's close, that's been the area that's been defended so far this month. You can see it right there. Even as high as 2080 likely to be defended for a pushback down. So even if this squeeze has taken hold here, that's a day one rejection at a significant edge. So any pullback there could be an opportunity to push this thing back down and work its way lower. 1950 still the target. To get this close and then get a huge squeeze is not typically what you'd like to see, but again, bears still defending any pullback into this zone until proven otherwise, with a downward bias off of that strong high. Now, keep in mind we do have a pretty decent lower trend line here that's coming into play. And if we start to form higher lows here, then prices above the previous close of last month's range here could be at risk for a shot at squeezing back up for a pretty strong test of these highs. So again, got to continue to watch the previous month's close. Taking a look here at the YM, this one right now up about 0.2%. Big squeeze, no pullbacks. Since the trap at 32.8, this thing has exploded to the upside, reaching highs of 37.6 today. Big time continuation, no pullbacks, only down days within range. Big time squeeze, rollover gap, and continuation. You can see the previous session here, we had the FOMC key level go bid, 36,979, bang. And that's through the previous year's high. So this is the previous year's high price, and we have an FOMC key level developed above it and then taken bid. What happens if we find rejection up here and take this level offered? That could become a trap of prices above the previous year's high. And if this FOMC key level goes offered, we tend to go back toward the previous. The previous is way down here, as the November FOMC key level went way bid. Probably one of the biggest stretches between two FOMC key levels on record here, as in 6 weeks we've seen this thing rise from 33.2 to 36.9. That's a big difference. So again, big time strength, no signs of rejection, but we are in lofty territory here, and it's either continuation to the upside into newly traded territory, or it's rejection of those newly traded prices and a return back into the range below. So continuing to watch this action here in the YM. All right, that is it for now. We'll see how this develops the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.